You know, when a big-name market strategist like Tom Lee makes a call, you kind of have to pay attention. But when he calls something the trade of the next decade, wow, you've got to ask yourself, what is he seeing that maybe others aren't? Let's dig in and break down his case.
And boom, there it is. No mincing words. The entire idea, the whole thesis, it all comes down to this one really powerful statement about Ethereum, right? Not Bitcoin, not some random altcoin. He's saying Ethereum is the foundational bet for the next 10 years. So why? What's behind all that conviction?
Okay, so we've got the why. It's Ethereum. But just as important, maybe even more important, is the how. I mean, what if there was a company out there that was literally built to be a leveraged bet on that exact trade, a way to potentially juice the returns if this whole thing plays out? Now that's the really interesting part we're going to explore.
All right, so to really get a grip on this opportunity, we have to look beyond just the daily price wiggles on a chart. Tom Lee's case here, it's not about speculation. It's built on 3 solid, fundamental pillars of real-world use that are already happening right now.
So pillar number 1 is stablecoins, and Lee has this great analogy for it. He calls it crypto's ChatGPT moment. And that makes so much sense, right? It's that sudden viral explosion of a killer app that everybody just gets. We're not talking about some volatile, speculative asset here. We're talking about a tool for moving real money around the world super efficiently. And the scale here, it's already mind-blowing. We're talking over 170 times billion dollars in stablecoin supply. This isn't some tiny little experiment anymore. This is a massive, fully functioning market that has absolutely found its product market fit.
But here's the kicker, the really crucial part. The vast majority of all that value, we're talking over 70% of it, is settling on the Ethereum network. And think about what that means. Every single one of those transactions needs a tiny fee paid in ETH. This creates real, organic, sustainable demand for the network's own asset. I mean, this is utility in its purest form.
Okay, on to pillar number 2, institutional adoption. You know, for years, this was just a buzzword, right? It was this promise of, oh, the institutions are coming. Well, the evidence is pretty clear. It's not a future event anymore. It is happening right now.
And just look at who is building on Ethereum. I mean, seriously. These are not little crypto startups. These are the absolute titans of traditional finance. We're talking JP Morgan, BlackRock, Robinhood, Visa. They are all actively building products and infrastructure directly on the network. This is a huge signal. It's a fundamental shift from the fringes right into the financial mainstream.
And pillar number 3, this might just be the biggest one of them all. It's the tokenization of real-world assets, or RWA. The whole idea here is putting things from the real world, like bonds, real estate, US treasuries, onto the blockchain. And guess which blockchain is poised to be the main settlement layer for all of it? Yep, Ethereum.
And this chart just brilliantly illustrates the insane potential here. Right now, we're at about $5 billion in tokenized RWAs, which, hey, that's already a big number. But get this. Boston Consulting Group estimates this market could hit $16 trillion by 2030. $16 trillion. If Ethereum is the foundational railroad for even a fraction of that, well, the implications are just enormous. Okay, so that's the why. That's the whole thesis behind Ethereum itself. Now let's pivot and talk about the how, the specific investment vehicle that the source material is calling the MicroStrategy for Ethereum.
All right, the company is called Bitmine Immersion Technologies, ticker BMNR. And their strategy is actually super simple, become the world's biggest corporate holder of Ethereum. But here's the real twist, the part that makes you go, The chairman of the company is Tom Lee himself, the very same strategist who came up with this trade of the decade thesis in the first place.
And just to give you a sense of their position, BMNR already holds something like 3.4 million ETH. Let that sink in. That's around 3% of the entire circulating supply. This is an incredibly concentrated, high-conviction bet on the success of the Ethereum network.
So you might be asking, how is owning this stock any different from just, buying Ethereum directly? Well, it all comes down to the mechanics of leverage. Let's actually break down the math behind this whole thesis. It's a really straightforward kind of 1, 2, 3 logic. Step 1, ETH's price goes up and hits Tom Lee's bull case target of $10,000. Step 2, BMNR's treasury, because they hold so much ETH, just balloons in value to over $34 billion. And then step 3, the thesis suggests that this massive jump in their asset value could seriously amplify the stock price, potentially delivering some really outsized returns compared to just holding ETH.
And here are the specific scenarios they lay out. In a sort of base case, if ETH gets to $6,400, they project the stock could be around $87 to $100. Now, in the bull case, with ETH at $10,000, that projection jumps way up. And then there's this ultra scenario, right, where that real-world asset tokenization thing we talked about really truly takes off. In that case, the potential market cap could see a massive, massive addition.
All right, so we've looked at the thesis, we've looked at the vehicle, and we've walked through the math. Let's pull this all together and look at the complete bull case, but also, importantly, acknowledge the risks involved. You know, gotta have a balanced picture here.
So the bull case is presented as this self-reinforcing flywheel, like an engine that feeds itself. It all starts with that leveraged exposure to ETH's price. That gets amplified by their goal to buy even more ETH, which then in turn generates more cash from staking. And this whole flywheel is supported by really strong fundamentals, like having zero corporate debt and seeing all this institutional interest. It really creates a powerful story for growth.
But you have to weigh the risks. It's absolutely crucial. That same leverage that can juice the gains, well, it can also amplify the losses, which means you're looking at higher volatility. And to buy all that ETH, the company has to raise money, usually by issuing new shares, which can dilute the value for existing shareholders. And finally, you know, the whole regulatory landscape around staking, that's earning yield on your ETH, it's still kind of up in the air.
And all of that leaves us with the big central question, doesn't it? Is this the modern version of investing in the railroads or the internet backbone of a whole new financial system? Or is it just a really, really concentrated bet on a super volatile future? The thesis is definitely compelling, but like Tom Lee himself said, this is the trade of the decade, and I guess only the next 10 years will really tell the tale.